What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the overall market and give you guys a very big update on something I said earlier and talk about what I meant by it. Before I begin down about all this information, talk about SPY, Tesla, and just a couple of tickers for this Friday night, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice. Also, don't forget to smash the like button. It not only benefits me, it benefits the entire community as a whole. And finally, don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed up to 10 free stocks. Put in $1,000 and you're guaranteed up to 15 free stocks. Anyways, let's talk about the market now. What on earth is going on? So just to clarify something, okay? Over the last couple of days, I've been turning very bullish on the market, saying we're likely going to see a breakout, or a really nice push to the upside. In the morning, I told you guys that we could see some sideways price action to start us off. And then I was still leaning more bullish, and I wanted to watch for confirmation of a break above this resistance. As a result, that's what happened, right? The market broke out. I told you guys later on in the later video that we could see SPY try to test this like 428.5 resistance. It could even break this. If it broke and held this very nicely, we could have even gone to like 429, even a little bit higher. The major resistance would have been around like 430, but we came just short of that. And overall, I mean, the market made a very strong move. But the question is, what's going to happen moving forward? Now, I released these videos talking about how I was bullish, leaning more bullish, and I gave you guys lots of my projections for different stocks. I always am careful to give you both the bullish and bearish cases nowadays because always unexpected news could come, but I tell you where I'm leaning towards. And as the market continued to pump at about, I think it was like 2:30 p.m. Eastern time, I released a video and I told you guys that I had a warning for everyone. And in this warning, I broke down how, we had some potential sell signals developing on the Triple Q and the Nasdaq, and for many tickers out there. Now, these were not playing out yet. I made that very clear. They're not playing out yet. The market is not correcting yet uh, in a confirmed trend to the downside yet. But it could happen depending on Biden signing the deal. Now, I'm not trying to be pessimistic. Let me clarify this. I know some people in the comments were saying that. I'm not trying to be pessimistic. I'm simply telling you what the charts are telling us. There were instances where the market came down. Even in a bull rally, the market could get those corrections temporarily. That is normal. And I am seeing signals of that potentially happening, but we need confirmation first before becoming more objective about it. But then I want to clarify something else. When I talk right here about these warnings, am I referring to a crash or am I referring to a very healthy pullback based off the technicals, a technical pullback? The answer is I am not referring to a crash. Okay, there's a big difference here. Talking about a crash to new lows would technically be kind of pessimistic in a way because you're basically implying that all of these supports are just going to break over and over again, one at a time, one by one. And that hasn't really happened this year in its entirety. Yes, we've had these pullbacks, even some significant corrections, but the market continues to rip to the upside. And this is why I want to warn you guys that there is going to be a correction eventually, okay? A bigger one. But I'm not saying it's going to be a crash to new lows. I don't want to make that call. And why am I saying that? Why on earth am I making that claim? The answer is you have to understand price action, how support and resistance levels work, and how sentiment shifts. What I mean by that is right now the market, okay, is very greedy. People are buying in like crazy, and the market makers are likely trying to trick some people for like the more medium term. They want everyone to turn very bullish, of course, so that when the time comes for there to be an actual correction, many of us are not going to be prepared for it. But at the same time, what signal is there that there's going to be some big correction? Well, we have some on the QQQ and the Nasdaq, which I will talk about in just a couple of minutes. But there's no signal that we're going to break to new lows. We're about to crash very hard. There's no true signal that suggests that. Why? Because is the market truly downtrending yet? Not yet. And even if it does do that, how do you know that the support right here is going to break, or even the support all the way down to like 420? How do we know it's going to break so hard without getting a bounce again? We don't know that. And that's why you always need to watch for confirmation. I stress that very hard on this channel. And on top of that, you have to ask yourself, okay, could we make these calls about the market crashing? Yes, we could try our best to, but the question is, what catalyst is there going to be to cause it? What catalyst is there that's going to cause like these crazy, crazy things, right? Is there going to be another bank failure? Is there going to be something else? I mean, we're not seeing the catalyst yet. So it doesn't make sense to make this insane move. But, anyways, the point I'm trying to make is we have to just be patient and wait for whatever catalyst is going to come out that's going to move the market after the debt ceiling to play out. Why? Because you could look at macros all you want. You could keep saying the market's going to crash and this and that. Well, remember, before making that claim, you have to understand the market's perspective. The market is interpreting things very differently. Let me give you an example. When the unemployment numbers came out, unemployment was hot. We saw an increase in unemployment, but the amount of new jobs that were gained went up, and the market focused on that. Why did the market, excuse me, focus on the job gains? Because the market wanted to pump. Why did the market want to pump all of a sudden? Because there were so many puts expiring, right? It went up to 1.4 million. Remember, I was showing you guys this, it was 1.3, now it's 1.4 million. People kept shorting and shorting and shorting. They were forced to squeeze and close their positions, which caused the market to squeeze. So here's the thing. With all of this madness in the markets, you have to understand what the market makers would be thinking on a day-to-day basis, and you have to watch for those confirmations first. That's why I don't try to be, way too optimistic and say the market's going to all-time highs, or anything like that. I'm not trying to be way too pessimistic either. I'm just trying to be as objective as possible and just show you what the trend is telling us. And the trend is telling us that we are due for a technical correction, right? A very, very healthy correction. Why? SPY's RSI is at 79. Could we get one more pump into these high levels and then end up getting the sell? That's also a possibility. It depends on how the market responds to Biden signing the deal. But don't forget, the market has been pumping as we approach the deal signing date, which is likely going to be either today or before June 5th at the latest. So be careful. If the market does start selling off, you have to watch your support levels. Now, why am I talking about a potential sell-off? First off, historically, that's what tends to happen. We're very overbought, so we need a correction. It's just technical analysis 101. And secondly, when you zoom out of many other tickers like the QQQ and the Nasdaq, bearish divergences are developing. Right? We have this bearish cross on the PPO, on the QQQ that just developed, which is starting to make me think that this thing is going to cool off a bit. On the smaller time frames, it's also very overbaked. Could get one more pump on Joe Biden or not. I'm not too sure about the final pump, but it's likely going to see a very healthy correction, completely normal, nothing to be too scared of until we see the catalysts. Then my opinions could change, but I don't know what the exact catalyst is going to be to cause like an even bigger pullback or something massive. I'm not seeing that yet. I'm just talking about this from a technical standpoint, very healthy looking pullback. And then for the Nasdaq, same thing, right? Bearish divergence is still developing. You can see it right here on the 1 hour, the 4 hour as well. If we get a rejection here, it's going to likely come all the way down close to the 50 EMA. We'll just have to wait and see on this. There's no sign of it starting yet on the Nasdaq. It is showing some signs of weakness, but it's not extremely strong like that of the QQQ. But that's what my point is, okay? It's not a matter of me just being pessimistic. It's just a matter of me showing you what these charts are telling us, what's very healthy in the markets, and finally, what you should be watching for moving forward, okay? So with all these people on YouTube who are saying, there's some people who are just perma bulls who keep saying the market's going to keep pumping over and over again. Other people are just constantly preaching about a crash. The crash is coming, it's coming, it's coming. If they keep preaching it, there is a chance they could be right. But the thing is, first off, you have to remember what could cause a crash to new lows. Okay, a tightening of credit conditions, high inflation and all these different things, right? The Fed becoming more hawkish again, uh, even, some kind of black swan event. But my question to you is that happening right now at the time we're speaking? Is it happening right now? Right now, not really. The biggest thing right now is just going to be the debt ceiling, and we're just waiting for that. And so far, the market likes some of the data that came out. So why just be, trying to short the market and just trying to time a crash when we've been pumping and pumping and it's been pretty obvious on our technical indicators? It's more intelligent to just play the chart, make money on the way up, close your positions, secure profits, which I keep preaching about on this channel, non-financial advice. And then when the signal starts suggesting a pullback is coming, you could start playing the short side, secure profits again quickly. If we keep breaking supports, you have more opportunities to short. But for now, I'm not saying anyone that's saying that there's going to be a crash is wrong. They could be right, of course, if we get the right catalysts. But right now, in the current present time, the market will move based off its own ideas and based off what the market makers want it to do. And for this week and last week, look at how much we pumped on Friday, on this Friday and last Friday, because so many people were shorting. That's what the market makers were trying to do. Now we're due for a healthy pullback. There are not too many puts expiring for next week. We are due for it. I think we're going to get it. But that does not mean we're just going to crash. A healthy pullback could be followed by a holding of certain supports and then another bounce later on. But until then, I don't want to time like the next 10 moves. I don't want to just trade based off 20 days ahead or 30 days ahead based off what I'm trying to deduce. It's more like let's just see what the next bigger move is going to be, what the technicals are telling us, watch it on a level to level basis, and then look for your entries and exits to secure profits and to maintain a very, very healthy stance, if anything. So if the market's going to cool off, look for confirmation first. When you get the confirmation, you can have a signal to enter a position. And then when you enter the position, don't be too greedy. Have a target in mind, and profit is profit, right? We should prioritize, this is not financial advice, prioritize quality over quantity, right? It's very good to cash those bigger moves. That's what's worked for me. And I like to just not be too greedy. I like to be very patient as well and not get caught up in euphoria and chase certain plays. Hunt for opportunities. Don't simply run after them and chase all day. There's a big difference there. And that's what's going to help make the good traders and distinguish them from those who are just gambling or making mistakes or taking bigger risks without risk management. All right, that's what I have for this video. Let me be clear. I'm not saying the market's going to crash. Okay, I'm not saying we're going to get this huge crash right now. It could happen in the future, but I'm not getting any signals suggesting we're going to crash extremely hard or to new lows or anything like that right now. In the future, that could change depending on the catalyst. But for now, right now, I'm seeing signals suggesting that the market may slow down and get a pullback, a very healthy pullback very soon. We need confirmation for me to be way more confident about that claim. But I do believe the odds favor that based off the signals and based off historical data. So I'm just going to make it clear, okay? I'm not trying to be negative, just trying to tell you what the charts are suggesting and what's very likely based off this technical setup. All right, so thank you for listening. Please have an absolutely incredible weekend. Remain calm, cool, and collected. Do what you have to do. And please be prepared for what's about to come. Watch the news about Joe Biden, and I want the best for everyone, okay? Thank you for listening. I really appreciate all you guys. The market to the moon is the long term is very bright, and peace out.